Is the housing market really going to be good for buyers in 2025? We're going to take a look today at this news story from News Nation. And I saw this story come out. I saw this headline. I thought, is this true? Why am I making this video? Because I will tell you, one of the things I can't help but notice is that mainstream media gives us some of the absolute most ridiculous reporting when it comes to the real estate market. And it's not just the real estate market, but that's my lane. So today we're going to take a look at this article, or this, I should say, news story by News Nation. And the question is, are they accurate in this information as it's coming out? Let's kind of dive into it together to find out. But first, for those of you that aren't familiar, my name is Nick Belmore, and I am a realtor here in West Michigan. And I love to help people out there find the right house and be informed about what's happening here in our market. So hopefully small stations like this, or small channels like this, can help to fill maybe a little bit of the gap that mainstream media seems to be leaving in trust out there, at least with the audience. Let's find out if that's the case here. Let's dive in and take a look.
2024's real estate market ended with increasing home prices and high mortgage rates. But buyers and sellers are curious what this new year has in store. Here with us now for a look at what we can expect in 2025 is mortgage lender and Senior VP of Lending at Rate.com, Jennifer Beeston. Jennifer, welcome.
Thank you for having me. It's nice to be here.
It's great to have you. So let's look ahead to what to expect this year. You've broken down 3 things you say we should expect from real estate in 2025.
Okay, first off, I just want to note the source, the interviewee in this news story is a mortgage lender, and kind of seems like we're about to get a little promotion of the market here. Let's see if that holds true.
First is about how the market will be for buyers. What do you think?
That's right. Well, so I think buyers need to be prepared for volatile rates. We don't really know exactly.
So something I can't help but notice, we're less than a minute into this. We started with the title of the market's going to be good for people, and now we start out with rate volatility. Little contradiction here, right? Is rate volatility great for the buyers? I'm going to tell you, typically not. So it's kind of strange to me, and I do find that this is probably one of those gaps that we're talking about when we look at the mainstream media versus, smaller media outlets out there today. How do we start out with, hey, it's going to be good for buyers, and then we start to talk about the fluctuation of rates, especially when we're in the highest rates we've seen in at least the last 10 to 12 years, without a doubt. Let's find out
exactly how the new administration is going to affect rates yet. So my advice to buyers on rates would be, don't max qualify for that mortgage. Make sure you have some wiggle room just in case we do see those fluctuations as we see how the market reacts.
So again, I'm going to ask, what are your thoughts out there? You guys, is it always the case that you shouldn't buy to the very top of your affordability? I would say so. I would say that's great advice no matter what the market is doing. So at this stage, don't spend to the very top of your availability. Yeah, I tell you the same thing on a car, and I would have told you the same thing as a buyer 5 years ago, 10 years ago, 15 years ago. It's never a great idea to stretch yourself to the absolute max in your purchase price. I don't know if that's supermarket dependent, quite honestly. That seems like common sense, logical advice, whether it's 2025, 2024, 2023, 2022, or even 2021. But let's see what else.
Do you think it'll be a buyer's market or a seller's market in 2025?
That's a great question. And I'm going to say that real estate is more micro than it's ever been. So there's going to be markets where it's a buyer's market, and there's going to be markets where it's still a seller's market. It all comes down to supply. We still have a supply issue in the bulk of the United States.
As we look at that, is it going to be a buyer's market? Is it going to be a seller's market? One of the things that absolutely drives me nuts is the way that these terms get used in the media. We've already got definitions for these terms within the industry, and honestly, as a buyer, seller, as someone investing, it's important to know how these things are defined. What is a buyer's market? A buyer's market is typically defined as a market with over 6 months worth of inventory. One thing I have to admit for everybody out out there. Most people have no idea what the heck we're talking about when we're talking about months of inventory. This is a weird system we have in the industry. It's super odd for us to measure the amount of houses out there with time. But let me do a quick breakdown and just tell you how they come up with these numbers. Number one, they're looking at what's called the absorption rate. How many homes are selling in a given month on average, and how many homes are out there in the marketplace. If we were in a situation where 5 homes were selling every month, but we had 20 homes total for sale, then we would be said to have, at that stage, 4 months worth of inventory. Because if no other homes came on the market and we were selling 5 a month, it would take us 4 months to sell all 20 of our homes and be down to 0. That being said, our typical definition of a buyer's market is over 6 months of inventory, meaning that if we continue to sell homes at the current rate, it would take 6 months plus to sell out all the homes that we've had. So with that being the case, are we in a buyer's market? Well, here in West Michigan, no, not even close. Are there a few areas that are starting to come into a buyer's market in the country? Yeah, there absolutely is. We're starting to see it down in Texas in certain areas that had a giant blow up when it comes to pricing, and maybe some of that demand is absolutely cooled off. We're seeing it in Florida, especially in some of the areas where you've seen it double, triple, quadruple for just the cost of insurance, or insurance is simply unavailable, making it near impossible for anybody but a cash buyer to purchase in some of those areas as well. Overall, throughout the majority of the nation, not these niche spots, but throughout the majority, we will not be seeing any type of buyer's market. What else is out there then? What are the alternatives? Ultimately, we're looking at either a seller's market or a flat market for a lot, or a balanced market, I should say, instead of flat. But a balanced market typically is flat. So with that being the case, what do those look like? What is the definition? For us, it's usually 0 to 3 months constitutes a seller's market. How do we know it's a seller's market? Because we're still typically seeing strong appreciation. Or we're looking at a balanced market from usually 3 to 6 months. And in a balanced market, there's very small amounts of appreciation, or it's a very flat market, meaning the homes didn't gain very much out there. 2.6%, as they're predicting in this story, is traditionally what would be considered more of a flat market or a balanced market as we're going forward. So, answer to this question, are we going to see a buyer's market in a few niche areas? Yes, we are. But if we're talking about a generalization of the marketplace, the answer is no. And if we're talking about here in West Michigan, the answer is absolutely no. Nick, how do you know that? I'll tell you how. Because right now we have 1.2 months of inventory. We're very far away from even a balanced market, meaning we're over the 3 months of inventory. Now, if you want to know, is it coming? When am I going to see it? Watch your inventory levels. The more your inventory levels start to rise, the closer you're going to be to a buyer's market. That being said, if you're a buyer out there, you're sitting on the fence, I'm waiting for that buyer's market. Don't. That's not a great place for you to buy. Typically in a buyer's market, you're going to buy that home and then it's going to be worth less the next year. So we don't want to be in a position where the home is depreciating. Even for buyers, your investment is better made in a seller's market where you buy the home in March and it's worth more money as you continue to go forward. So, knowing that's the case, we want to be able to make sure that we're making our decisions based on necessity. What is the need? Not ultimately what is the state of the market. So let's take a look at what else they have to say.
It's early January. How is this time of year for people who might be on the search for a new home? They want to get into a new house, new apartment in 2025.
I think January is a great time to go shopping, and the reason is you have serious sellers. You usually see people who are trying out the market to see if they can get the most money in spring. So January is a really good time to go out, see what's there, and see what the serious sellers are expecting.
So again, why does the public lose trust in mainstream media? Because they're literally trying to tell us right now that the serious sellers are out here in January, as if the sellers in the spring aren't serious. Wait a minute, traditionally, the spring market is the strongest time of year for sales. So am I to believe that now the sellers are serious, but the sellers aren't serious in March and April? If they're not serious, then why is that traditionally the highest volume time for sales? This is kind of a silly point to make, quite honestly, to me. Let me tell you something. If you go out there and you start to put your home out and you let strangers through and you do the effort to clean it up and get it where it needs to be for showings, and you sign a contract with the agent and you go through all the process it takes to be a seller, you're probably serious. I mean, we're talking about maybe a tiny amount of people that are time wasters out there, but for the most part, nobody just throws their home up for sale without there being some level of intention going there. That being said, where do you see people who are a little bit less serious? On the buy side. Because here's the reality. Spring market comes up and not all the buyers are going to go out, do their due diligence and get pre-approved. A lot of them are just going to go out and jam through some open houses and start to take a look in those neighborhoods that they like. If you're out there in 6-inch snow, you're probably not a buyer who's just looking because they have nothing to do on a Saturday afternoon. So to make this implication that the serious sellers are out in January, but they're just testing the market in March is ridiculous. I honestly don't see how this person can say this in a news story and feel good about what they're doing, but let's go on and see what else we can learn.
You talked about mortgage rates a minute ago. That's your second item on the list. What are your thoughts for that in 2025?
My gut is that we're going to be in that mid-6 range, going up and down with sentiment. That's for conventional mortgage. Government mortgages, VA and FHA are always going to be lower than that. But I think you're going to see a fluctuation of up to 0.5%, just given whatever's happening with policy.
So what do you say to those people who are hoping those mortgage rates will fall back down to 4.5 to the 5-point range?
I say they're going to be waiting a long time. And the bottom line is this: if you're looking at buying a house, get qualified with what rates are now and make sure you can afford it with what rates are now. Don't count on rates dropping. There's no guarantee. So you really want to make sure that you can comfortably afford what you're purchasing.
That's actually really good advice.
That's really good advice. I would agree. But is that market specific? No, not at all. I'm going to tell you, if you would have met me in 2003, I'd tell you the same thing. Don't buy at the very top. Leave yourself a little bit of wiggle room on pricing. And if you would have bought in 2012, I would have told you the same thing. And if you would have bought in 2018, I would have told you the same thing. And if you buy today, it's still the best advice out there. Is there ever a time you should literally spend all of your money or get out of your comfort zone on pricing? No. So is that great advice going forward? Yeah, I guess so, but I don't know if this is that hard-hitting of an article when it comes to advice for buyers in 2025. Yeah, don't buy what you can't afford. By the way, they won't let you. They're going to qualify you based on your income. So there's not a mortgage company out there that's going to go, oh man, let's just give them more money. That's not how mortgages work.
Last on your list is loan options. What should we expect when it comes to that?
I'm actually super excited about that. So I've been a lender for 18 years, and I have to tell you, there are more loan options right now than I've seen in my entire career. So anything from grants for first-time home buyers to more creative underwriting for self-employed borrowers. We've really seen lenders over the last 2 years bring everything they can to help Americans get into homes. So I'm super excited about that.
Are there more options today than the last 18 years? I'm going to tell you, I'm a little skeptical on that statement. And I'll tell you the exact reason why. Is there more ways for them to sell you a mortgage today versus the last 2 years? Yes. Why? There's a higher rate. So typically there's a little bit more money in it, and the volume has gone down because less people are getting mortgages. So a lot of the times they're trying to make that gap up. What about the past? If we were to go back to 2005, 2004, 2003, we were in a situation where there were way more choices. There were 80-20 loans, there were stated income loans, there were all these different things. Now, was that a good thing? I'm going to tell you necessarily no. Why? Because that's probably the biggest factor that led to us being in the situation where real estate was overvalued, credit evaporated, and we saw the largest crash, at least in my lifetime, when it comes to real estate values. So I certainly wouldn't say we have the most options, that's for sure, but we shouldn't. That's a good thing. You do need to have some skin in the game to buy, and there needs to be some affordability considered into that. In the old days, they would look at your credit score, you would tell them what you would make, and you could get a stated loan. And if your credit score was good, they'd lend you a huge amount of money with no verification of your income. We don't need to go back to that. That's not good for the market. That's not good for society. That's not where the mortgage industry should be going. But the idea that we have more programs today is just simply untrue.
I love that. I love the optimism. Hopefully that's exactly what rings true in 2025. Is there a loan type you would recommend over others considering what you expect the housing market to be doing in the next 12 months?
There's not a specific loan type I would recommend because it's unique to your individual situation. So for veterans, I'm always going to say, look at your VA benefit. You know, conventional mortgages are great, but FHA may suit you better. So it's down to the unique individual and their financial situation.
You mentioned a moment ago with the new administration, we don't know what to expect yet, but how do you think their policies or the policies will impact real estate?
Ooh, it's impossible to tell, right? Because we're hearing about deregulation, we're hearing about tariffs, we have everybody guessing how that's going to affect the market. But until we see who the people are that actually end up seated in power and what they come up with, I think that's where the volatility we're going to be seeing this year is from.
This is one where I'm going to have to take a little exception as well, because I'm going to tell you, I don't know that our real issue in real estate in the market as a whole comes down to specific policies from the government, or at least I don't know that the problems can ultimately be fixed by specific policies coming from the government. At heart, one of the biggest issues we have in real estate right now is the fact that there is far more demand than there is supply. And in the end, could the government deregulate things and help to move that along? Yeah, it absolutely can. But the typical house today takes 9 months from planning to finish for a builder to put out there. So in the end, some deregulation, those different things are absolutely going to be able to help put builders in a process to move quickly, but it will not address one of the largest issues that we truly see in keeping up with demand, and that is the lack of skilled trades. Because of the fact that we do not have enough skilled trades out there at this phase, it really is going to be hard for us to keep up with that demand. And we're still in a little bit of a debt from the time in 2010, 2011, when we had that giant crash and so many builders went out of business. And as a result, a lot of our tradespeople were hurt by that. A lot of our tradespeople went out of business as a result of the domino effect of that market. So what we saw is those people left the industry. They did not decide, hey, I'll just wait it out and then I'll start my concrete company again. They became salespeople. They became office workers. They got into different types of jobs at that stage, and they didn't come back. So you're waiting for more people to come in. And of course, a lot of people remember that. It's harder to take a risk of investing $250,000 of your own money into an excavator, or even 30 to 50,000 into a bobcat to do the backfill if you're a concrete guy, knowing that the rug can get pulled out at any time. Ultimately, we've seen large large fluctuations in the real estate market in short periods of time. And in the end, those are the people that are at risk. The tradespeople, for sure, are some of the highest risk people when the demand evaporates because maybe there's no credit like there was back then, or rates have skyrocketed and people simply can't afford to buy. Until we can truly build a strong foundation of tradespeople, we will struggle to keep up. And there's no government policy that's going to change that, and there's no deregulation that's going to make that any different. If money was free and demand went through the roof, we still don't have the building infrastructure to keep up with it. So it's kind of a moot point at that stage.
So Jennifer, with 2025, how do you think it will fare different than the past few years we've seen when it comes to real estate?
I think it's going to be the most normal market that we've had in a long time. Because just a quick history, 2020, 2021, rates were great. Horrible for buyers, though, because the competition was insane. Writing 30 offers, getting denied. 22, rates went from 3% to 6% in a year. Then you had, and the sellers still wanted $1 million for their house, even if it wasn't worth it. And then 23, sellers started to understand rates were going up still. 24, they started to come down, but we had an election. So I feel like 25 is a break. It's a return to just normal basics. I'm hoping for a no drama year.
Okay, so there you have it. She's hoping for a no drama year. What does that really mean to be normal in the real estate market? It's the most normal market you've seen in years. Let's just go through a brief history of the real estate market and its normalcy. I started in the real estate market back in 2001. I started literally just after the 9/11 terrorist attacks, and that was not a normal market. Why? The nation was starting to go to war. Economics was a big piece of that war, and pushing down the rates at that stage. Rates were coming down from at 6.5 or so of the high when I started, down to normalizing right around 5 for quite some time at that stage. Was that a normal market? No, that was a market driven by world events, and rates were being pushed down by the Federal Reserve in order to stimulate more growth in the economy. So no normalcy in my eyes there. Then we had a few more years go by, and what happened there? We started to see the big credit drop, and we started to see the downfall of the perfect storm in the market between risky lending and between a big hit to the stock market. We started to see that start to drop into the biggest foreclosure market in history. Was that normal? I definitely don't think so, because the government's response was to plunge rates down, down, down again, and it still took several years to cover that gap. As a matter of fact, it wasn't until about 2012 that the market started to recover. Surely we had a normal market then, right? No, because housing had stayed depressed and underpriced for quite some time. So there wasn't a lot of normalcy to that market. Even through the teens, we continued to see a fairly low rate boom in the industry. So big expansion, was that considered our normal market? I'm not so sure. But what happened next? We got into the early 20s and COVID hit, and the Fed again shot those rates down to the bottom. Is that a normal market? And what is a normal market? Can we call it a normal market when there's a continuous fluctuation in rates caused by the Federal Reserve? If we're going to let it be normal, we should probably stop manipulating the rate. Now, that being said, that could shoot the rates up into the 8s, 9s, and 10s. If it was not being forced down artificially by the Fed, that could be just as bad for us because of what had happened. That being said, it's not going to matter because the Fed's still going to do its thing, and we're not going to see a normal market. No drama market? Come on. People's biggest purchases are always going to lead to a little bit of stress, a little bit of drama out there. What we need to see is a less manipulation, especially on behalf of giant corporate interests versus normal people out there. Hopefully you guys got some value out of this video. Of course, these things always get me worked up, and I do really truly believe this is exactly why small channels like this are important, because we get such a false narrative from the mainstream media as we're going forward here. So again, if you did get some value, do me a favor, please like and subscribe to the channel. It helps me to get more videos out to people and to help inform the public more about what's happening here in the real estate market. And if you're wondering about what your options are, what would be the right home for you as far as location and price goes, reach out to me. My contact information is in the description below, and I would absolutely love to help you find the best option for you and your family.